Price action scalping in forex trading involves making quick trades based on price movements and patterns, without relying on indicators. This technique requires a good understanding of market dynamics and the ability to read charts accurately. So traders, let me show you how I scalp using 1-minute chart using pure price action, combining it with market movements. Number 1. Know the importance of understanding market trends. The first and most crucial aspect of this strategy is understanding the current market trend. When entering the market, you must clearly identify whether you're in an uptrend, downtrend, or sideways trend. In my analysis, I draw a tight trend line and a channel to visualize the market's direction. This helps in determining whether the trend is likely to continue. The trick I use: spotting continuation patterns. A key component of my strategy is recognizing when the market appears poised for a reversal but is actually setting up for a continuation. For example, if the market has moved up and then enters a consolidation phase, followed by a significant bearish bar that broke the recent structure, many traders might interpret this as a signal for a reversal. However, if there is no substantial resistance or other macro-level indicators suggesting a reversal, this bearish bar can be a fake-out. Consider this scenario: the market moves up, consolidates, and then a large bearish bar breaks lower with a green candlestick. This situation might seem like a good short signal, but without major resistance or other reversal indicators, it's often a trap. Following this fake-out, a large green bar may appear, confirming the continuation of the uptrend. At this point, I look to enter a long position, placing my stop loss just below the consolidation area. This protects my position in case the market does reverse, but it generally supports the continuation of the trend. Then after that, wait and see where price will head to, and by following the trend line, it shows our market will buy. The market continues to buy, as you can see. And now, let me show you how I manage my trades. Once I enter a trade, I move my stop loss to break even once the market has moved favorably to a certain extent. This reduces risk and ensures I don't lose money on the trade if the market reverses unexpectedly. As the market continues to trend upward, I trail my stop loss aggressively to lock in profits, avoiding the risk of a significant pullback. Another example here. We want to see a fake out in a certain direction, and as you can see, the market is on uptrend because the market made higher highs and higher lows. And still, we are not at our key levels like resistance levels, so there is no any sign that the market is going to reverse, so look for this market to continue rising. But we have to wait and see a fake out. Most importantly, wait for price to consolidate so that you can see this fake out. Once price consolidates, that's where a fake out is expected, and when this happens, it reverses, an existing trend continues. The secret when waiting for a breakout is waiting for candlestick closure, because something like this can happen. So wait for candlestick to close, watch and see where it closes at. So, if we actually break this high of this candlestick, that shows a lot of strength. So, let's see what will happen, and remember, we are trading live. So our overall trend is bullish, keep that in mind. So this is our key level and we are paying attention to this level. Remember, as the market is rising, we move the stop losses to break even. Let's now watch closely the significance of market context. A critical aspect of my strategy is analyzing the broader market context. For instance, if the Nasdaq futures are approaching highs but the S&P 500 futures, ES, are still far from their highs, it's likely that the Nasdaq will break its highs before encountering significant resistance. This insight allows me to anticipate continued upward movement in the Nasdaq futures. Conclusion. To summarize, this continuation pattern scalping strategy involves 1. Identifying the current trend. Draw tight trend lines and channels to understand the market direction. 2. Recognizing fakeouts. Look for bearish bars or other fakeout signals in consolidation phases that suggest a continuation rather than a reversal. 3. Entering trades. Enter long positions after confirming the continuation signal, with stop losses placed below consolidation areas. 4. Managing risk. Move stop losses to break even as soon as the market moves favorably, and trail stops to protect profits. 5. Analyzing market context. Consider the broader market, such as comparing Nasdaq and S&P 500 futures, to anticipate trend continuations. By focusing on price action and market movement, this strategy helps capitalize on continuation patterns efficiently, thus minimizing your losses and maximizing profits. That's all for this video. I'll see you in my next video. Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your forex account because you will not like the results. This book will introduce you to another side of forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for those so-called forex mentorship. You can make payments via PayPal, Binance USDT, M-Pesa and Send Wave. Look for payment details on the description of this video. Send your receipt and you will get your copy. First come, first serve. Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your forex account because you will not like the results. This book will introduce you to another side of forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for those so-called forex mentorship. You can make payments via PayPal, Binance USDT, M-Pesa and Send Wave. Look for payment details on the description of this video. Send your receipt and you will get your copy. First come, first serve.